Good morning, everybody. It's the 6th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Taff this morning. How you doing, Taff?
I'm all right, Joe. You well?
Yeah, good, thank you.
Good, good.
Okay, so let's get stuck into the latest headlines then before moving on to some charts and having a look at how things are setting up for the day ahead. In terms of the latest headlines, we had the US ADP jobs data yesterday meeting expectations. It recorded an increase in the private sector payrolls of 208,000 for September, slightly above the consensus forecast of 200,000, while the August increase was revised up sharply to 185,000 from 132,000. The annual increase in wages for job stayers edged higher to 7.8% from 7.7%, while the rate of increased job changers slowed to 15.7% from 16.2%. We also had some solid ISM services data. The US ISM non-manufacturing index declined marginally to 56.7 for September from a previous reading of 56.9, but was above the expectations of 56. The US yields increased again. The slightly stronger than expected US data helped trigger reversal in the treasuries, with yields again moving higher. The 10-year yield increased to highs near 3.8% before retreating to 3.75%. Pretty choppy trading yesterday in the dollar. It posted notable gains after the US data releases, with higher yields triggering a fresh advance for the US currency. Risk conditions were also again a key element, with the dollar strengthening as equities moved lower. The dollar weakened again late from Wednesday as equities also proved quite resilient. There's been elevated sterling volatility as well. It remained elevated, with the Bank of England again failing to buy gilts in the latest auction. There was no further clarification on the UK fiscal timetable, which undermined sentiment and contributed to further choppy trading in sterling as risk conditions had a big impact. And finally, in terms of the headlines, we had more hawkish rhetoric from the Swiss National Bank. They stated that the bank was seeing more signs of second round inflation effects, which was why the bank had tightened policy, and that it was quite possible that the central bank could again raise interest rates. So that's it for the latest headlines. Let's move on to some charts and take a look at what's moving this morning. So in terms of FX, let's kick off there with the dollar index. As we mentioned, quite choppy trading yesterday. We saw, let's just get rid of that black line, a bullish engulfing candle form yesterday on the daily chart. As you can see here, this green candle, really positive price action, engulfing all of the losses that we saw in the previous session. But interestingly, on today's open, we've actually seen a gap to the downside. Not often that you see this kind of set up on these charts, but as you can see here, we posted this really strong gains, but the open today was around the midpoint of yesterday's price action, so quite a significant gap to the downside there. If we look at the the intraday chart, we may be able to see that a little bit clearer. Let's just clear that up, the annotation. So we can see here the big move to the upside. Then we started to cool off a bit. We've got this huge gap here on the chart, and a really big spike as well shortly after that. So really, really choppy trading. Not easy to do much about that really, but underlying here, the trend still remains very strong, and I don't think there's any signs of it slowing down at the moment. So still very much suggesting that higher prices could be seen here on the US dollar index. Looking at euro US dollar, as we've been talking about for some while, this remains trapped within this long-term bearish channel. Yesterday we saw losses. We didn't quite engulf all of the gains that we saw in the previous session. We're on the front foot today by around about 0.25% as things stand, but we are fast approaching some resistance levels above. The one that really interests me is probably this level here, which is at 10058. We've got a level there to consider, and also that would pretty much nicely marry up with this downtrend resistance that we've got from the channel. So be interesting to see what sort of reaction, if any, we get at that point. If we start to see prices break to the upside, then that may indicate that we are going to see a wider correction in euro US dollar. But of course, we would need to see further pullbacks in the US dollar for that to persist. Looking at cable, as we mentioned on the market headlines, choppy trading yesterday. We engulfed all of the gains that were made on the 4th of October yesterday, and we are pretty flat as things stand at the minute, forming a little bit of a doji candle very early in the session. So of course anything can happen. We do have a couple of resistance levels above that we've highlighted, one at 116.00 and one at 117.83. And unless we can get above these levels, then I believe that we are going to see the downtrend persist here. Again, a lot will be dictated by the US dollar. But if we can get a breakout of these levels up here and break out of this short-term downtrend, then we may see a wider correction here on cable. But for now, the trend does remain bearish. Although we've seen a really sharp move to the upside in recent weeks, my preference still would be to sell into rallies for the time being. I'm going to leave it there with the currencies, unless there's anything else that anybody wants us to take a look at, and instead I'll move on to the indices now. So interesting session yesterday. Just take a look firstly at the top 50 stocks in Europe. We had this massive level of support at 33.86, which we're now firmly back above. Posted a really strong session on the 4th of October. In the last couple of sessions, we have seen a little bit of indecision, so we haven't really seen much in the way of follow through following that move to the upside. Overall, the trend still remains bearish. We can still see across multiple timeframes that we have sequences of lower highs and lower lows. So the belief for me is that we will see that continue, but we are seeing a little bit of a relief move to the upside or a correction in the very short term. Looking at the German market, we broke down through this 12,411 support back in the late part of September. We saw prices eventually move down to 11,810 before the buyers stepped in. We saw this big two-day rally. Yesterday was full of indecision, and today looks like it could be the same. So we are hoping to see some follow through here. Ultimately, again, the trend remains bearish. We're still in a sequence of lower highs and lower lows, and therefore any rally could be capped into the sort of 13,000 region before the sellers then step in once more. In terms of what's going on with the FTSE, this has been really interesting because, and I don't say that very often because FTSE isn't generally a great market to trade, but there is a huge level here on the daily chart. 68.22 to 68.42 is kind of the band of support that I've highlighted. And it's done a job on numerous occasions now, dating back to May 2021. And on each occasion, we've seen a pretty significant bounce from this level. And again, it looks to be the case once more. So a really strong reversal posted on the 3rd of October. We saw substantial follow through on the 4th. Yesterday, we did move to the downside to roughly 50% of the previous candle, of the Marubozu candle that we posted on the 4th of October. And then we saw a decent bit of buying to actually close pretty close to where we opened, forming a nice reversal on an intraday basis. Today, it's a little bit mixed. We're up by 0.15% as things stand. Be interesting to see if there is any follow through price action on that today. For me, there is some resistance that we should maybe consider around 71.40. If we can get above that, then that may spark even further price hikes in the very short term. But of course, there's a lot going on in the macroeconomic environment at the moment, and that could change all very quickly. Looking at the US indices, let's take a look at NASDAQ. So that found support at this 11,035 level, which we've been talking about for some time. This was a previous swing low from back in June. We did close below it last week on Friday, but on Monday, we saw a very sharp reversal. We engulfed all of the losses that we posted on Friday to post a bullish outside day candle. We saw good follow through on the 4th. Yesterday, a little bit of indecision, but certainly closed off of its worst levels of the day, which is offering some encouragement. Again, we are in a situation where the trend remains bearish. We are seeing lower highs and lower lows, and therefore, I don't think we should be getting too excited about a turnaround here. But during bear markets, you can see pretty substantial rallies to the upside. They are called bear market rallies, and they can be pretty vicious. So hopefully there will be some gains to be made in this in the short term. But I think we just need to keep this in perspective still for the time being. The overall trend does remain bearish, and the macroeconomic environment still remains bearish as well. Looking at the S&P 500, similar kind of situation to the NASDAQ, big support from back in June. We fell below that. We closed below it on Friday. We engulfed all of those losses on Monday. and we followed through quite well on Tuesday. Yesterday, again, indecision, and we're seeing that again this morning. Be interesting to see if we can follow through to the upside on this in the short term. And again, the same rules apply here. We are trading in the downtrend. We have got a sequence of lower highs and lower lows. And therefore, the bias does remain on the downside, but that doesn't mean we can't rule out some kind of rally in the short term that would provide some relief, certainly, to the beaten up bulls in the markets at the moment. We'll finish off with the Dow. This was the weakest looking of the US indices. We saw again this support back from June was taking out quite convincingly. We spent a little bit of time below this as well, and we tried to retest it from the underside and initially failed before we actually saw this big move to the upside on the 4th of October, which took prices back above that support level at 29,788. So we're above it at the moment. The last 2 days, well, including today, obviously very early in the session, but it looks a little bit undecided. I think we're going to need to see some decent participation here from lots of people in the market to try and push this higher. And without that, then I think we may see this roll over again once more to the downside and potentially go on to challenge this 50% fib level that we have down here at 27,578. So that's it from me on the indices. Taff, would you mind giving us
Yeah,
a
sure.
run through on crypto and commodities?
All right. Okay, cool. Let me just share my screen. There you go. All right, so I'll start off with gold. Go to the daily here. Right. So we had a bit of obviously because of yesterday's bullish engulfing on the dollar index. Gold traded. It was a bit bearish. We had this candle here that formed yesterday, which really signals that the bulls are for gold are really losing a bit of momentum here. And usually when I see this candle and it looks like it's a hammer candle, but it's a red candle. For me, I'll be looking for this wick to get filled in today. So that's my thesis, and that goes in line with the overall trend that we're seeing here. It's pretty much a bearish trend up until we take off we take out these highs here. Then I'm pretty bearish on gold. But interestingly enough, we've got this Ichimoku cloud resistance here, which is coinciding with the trend line as well. So that can make for very good resistance there. Let's drill down to the intraday and see what that means for the day trader. So I've got my support, my resistance laid out here. I'm looking for, as you can see, like I said, this is the trend line, and then this is the resistance. This is where the Ichimoku cloud resistance is. If gold is to go up, I don't see it overcoming this resistance here. It's a class of resistance. It's going to be pretty difficult for it to overcome. So I'm bearish on this, and I'll be looking for maybe a rejection from this zone here. And then alternatively, I'll also be looking for some sort of a double top to form here. All right, let me just expand that. I'll be looking for some sort of a double top to form here, which is probably already forming here. But generally, I'm looking for gold to go down, and then my first support would be this neckline area here around the 1700 zone, and my second support would be around 1678, which is an area that really formed as resistance before, and we broke right through it. So I'd expect it to change and to form into support. So yeah, so gold, I'm bearish today. I'm looking for that daily wick to be filled in today, and on the hinge of it'll be hinging on this resistance here. Let me go to silver. Silver, I think it's pretty much the same script as gold. Let me remove that. It's pretty much the same script as gold. We had this nasty looking candle here, which really is showing the momentum is from the bulls is faltering out. So I'm looking for followed through momentum on this bearish candle today here. Let me go to the intraday and see what that looks like. I've laid out support and resistance here. My first resistance is obviously yesterday's high, which is 21.22. I'll be the preferred trade would be for price to come up to that resistance here, get rejection, and then short it to target the first support, which is this 20.07, and then the second support, which is very close again, which is 19.7. If obviously the markets are very unpredictable, if something happens to the dollar and then some news comes out and then the dollar goes down again, then probably would take out this first resistance. Then I'll be looking at targeting the second resistance at 21.90. So I'm looking for price to pretty much range between this zone here, 19.7 and 21.9, with special emphasis on the first resistance and the first support. So that's on silver. Let's go to oil. So oil is quite interesting because of what's happening in terms of the macro environment. So you've got OPEC that met. I think they're actually still in Vienna right now, and they decided to cut the number of barrels that they produce, the output per day. So leading up to that meeting, I think you can see this bullish momentum that you were showing here. So leading up to that meeting, there was a lot of bullish momentum on the assumption that OPEC was going to cut, and then they did cut today. But interestingly enough, price did not react as was expected. Why? Because then the U.S. comes out, the White House comes out with a statement and says they're not in support of what OPEC did. Obviously, because it's not in the best interest of the United States to have a high oil prices. They're just going. They'll be going for midterm elections, I think, next month. So that can have adverse effects. So I think we have a bit of volatility in terms of the United States and OPEC on the other side. I think that's just a bit of macro to think about when you're trading this on an intraday, even on a swing trading basis. So
Yeah.
what we had
with oil, Taf, yesterday,
yeah.
I saw that there was reports from OPEC that they had cut because they were kind of forward-looking, believing that the economies around the world were going to start to struggle, and that was going to reduce the amount of demand for oil. So that's why they kind of took the action that they did. They were claiming when one of the CNBC anchors was speaking to the Saudi guy that
Prince.
the prince, sorry, shouldn't just call him a guy, that's a bit disrespectful, isn't it? Yeah, he was saying that they didn't really want prices to be high or low. They just kind of wanted a sort of stable price for it. And I think there is some logic to what they've done. But
it does, yeah, it does make sense. But look, I think at the end of the day, I think everything then comes down to what's the White House going to do, because it's within their power to release those strategic oil reserves, and that can really then counter whatever OPEC is trying to do. So it's really it's really a battle of the giants. But anyway, we'll stick to the charts and see what the charts are telling us. So we had this, we had bullish momentum coming in as from the 27th. Let me go to the intraday and just see where my support and resistance. So I've put three resistances here and then three supports as well. The first support is obviously this one here that was broken yesterday. If we test this and price rejects this, then we're obviously going to this first resistance here, which is 89.44. If we break that, test it again and bounce, then we're going to the second one, which is 92.60, and we go to the third one, which is 95. I am, however, I have a bearish bias on oil, simply because of the bullish engulfing that Joe talked about on the US dollar, on the dollar index. So I'm looking for that bullish engulfing. I'm looking for the US dollar to probably rally today. If that rallies, then I'm looking for oil to just correct, to have a correction on this bullish move that we had from the 26th of September. So I'll be looking for this first support to be broken. If it's broken and it's tested, then my bias would be to take a short on this, targeting short term 84.5, and then ultimately 82.55. This is for on an intraday basis. So that's my bias on oil. But then again, remember, like we said, there's if news comes out that the US is releasing those strategic oil reserves, then it could really change the short term picture of this. Let's go to natural gas. Natural gas is another one also that you also need to be aware of the macro environment behind it. I think the European Union is meeting today to discuss price caps on nat gas. So that could it's another fight between Russia. Russia is saying, look, if you put price caps, then we just simply won't sell the gas to anyone who's involved. And so I really don't know how the EU is going to do it there. Like, can you really put a price cap when you don't produce the product? It's something else. But anyway, so it's something that you should watch out for as a swing trader or intraday trader. That macro background. On the technicals, I'm looking at this resistance here. You can see that this acted price broke this was resistance. Price broke it, acted as support. We went up, price came, tested it, went up again, and then it kind of tested it here, and then we broke it here on the 22nd of September. So we'll be looking to test it again if it holds. And if you look closely, we've got a channel kind of formation that we have here. This held up in January. This held up again in February. This held up in July, and we're looking for this to hold up again in October. So we could have a bullish momentum that could take us all the way up there, depending probably on the macro environment. On the intraday, I have an interesting bullish head and shoulders here that could potentially form out. But for this to really go to completion, I'll be looking for a retest of that 6.8 level here, or the zone here, this 6.8 zone. If price comes down here, retests this, and then bounces again, then I'll be looking for a bounce. But take cognizant of this resistance here that I talked about on the daily chart, which is your 7.5 to 7.6. This could really hamper any further price bullish momentum here. So yeah, that's my take on natural gas. I'm looking for a bit of bearish momentum here, test this level, and then probably potentially bounce from 6.8 level here. That's on nat gas. Let's go to Bitcoin. Just start off with the daily. Just put my Ichimoku there. It's interesting. We've got if you can see on the Ichimoku, this level that I put this level here coincides with what we call the baseline on the Ichimoku, which is really simply your 50% fib retracement from this impulse here, from the high there down to the low there. That's your 50% retracement. That it coincides with the Ichimoku baseline. So price seems to be having a bit of a difficulty here overcoming that level. This is 20,485, and today we're rejecting it. We had this candle here that it looks pretty much like the same candle on the gold daily chart. I'll be looking for this candle to get filled this week here, to get filled and probably come down to the 19,500 zone. Let's see what it looks like on the intraday. See what it looks like on the intraday. Yep. So that's that zone, that level here, that's 24,485, the baseline that I talked about with the 50% retracement. Price is having difficulty overcoming this, and currently we're going down. My general bias here would be to buy dips. I'll be looking for price to come down to the 19,500 zone here. As you can see from here, from the 21st, we had a slightly higher low here, and then another slightly higher low again. So I'm looking for that trend to probably go on, and I'm looking for this neckline here to be tested. If we test it here, then I'll be looking for a bounce and then targeting obviously this previous high here, this 24.85, and then we've got another weak resistance here at 28.40, and then ultimately we're looking at 21.685. So that's on Bitcoin. My bias is slightly bullish, looking to buy dips. Let's see what's interesting on Ethereum. Ethereum is pretty much playing with the same script as Bitcoin. As you can see here, we had higher lows here, higher lows from June, uh, July again, and then we tested the trend line here again. We're testing it here. It looks like we're making some sort of a W formation, double bottom formation here. But then again, we had that candle, this candle here that I talked about. If anything, probably I'll be looking for this. I'll be looking for continue for this wick to be filled in today. That means we're testing this zone again, this 1328 zone. What does that look like on the intraday? Here we go. This is that zone that I'm talking about on the intraday. This is that zone, that 1328, and then we've got this trend line here that seems to be respected. We've got this, and then it's forming some sort of a triangle formation. My bias again is to take any bounce that comes on this zone here, 1328. If price comes there, bounces, we get a bullish engulfing, we get a bullish hammer or some sort of reversal candle or reversal pattern, then I'm looking to take that up, and I'll be anticipating for this trend line to be broken, right? And then medium term, I'm targeting 1505 for Ethereum, and then the other the resistance would be 1625. So for today, this would be my cap here, 1328. Looking to take any dips from there. I think that's all from my side, Joe. Thanks.
Fantastic, Tef, as always. Well done, sir. Okay, so in terms of the next part of the video, we're going to go to the gun to the head challenge, which is where we pick live trade ideas on the video in the hope that they play out between now and 9 o'clock UK time when we close them off. Alternatively, they will be closed when they hit their stops or their targets. So each of the ideas that we do come up with do have stops and targets and risk reward ratios in excess of 2 to 1. So yesterday, we had a trade on silver. It was only me yesterday, and sadly that trade was stopped out. I've actually lost the annotations and yet again failed to upload it to the TradingView profile. So apologies for that. I will make sure that is sorted today. But typically we do add these to the TradingView profile. And you can check them out and see how they go. Not been on a particularly great run in the last few sessions, just because I think there's been quite a lot of volatility in the markets, which doesn't help from a day trading perspective. Well, it can help if you get the right side of it, of course, but it appears that we've been unsuccessful in doing that. So I do have a trade idea ready. If you don't mind me going first, Taf.
Yeah, sure.
I'm looking at Euro US dollar. So this is the daily setup for Euro US dollar. Clearest downtrend you'll see really at the minute in terms of looking at a channel. It's very neat. Prices have been capped within that channel for quite some time now, and therefore I don't see there being any real reason for that to change. Obviously, if we do get a break out of the channel to the upside, then clearly I don't want to be in it short anymore, certainly not for any period of time while we let it play out. But for now, I'm still of the opinion that we will see lower prices. We saw this rally into a resistance at 99.55 yesterday. We did close, 2 days ago, we closed above it, but yesterday we closed back below it with quite a bit of red. So let's see what it looks at on the intradays. So this is what I was looking at. We can see the rally that's taken place over the last few sessions. We've seen a retreat in price yesterday. Overnight, we've seen a little bit of a consolidation, maybe or arguably some sort of flag pattern, which is playing out. So it's currently trading at 99.07. So I was going to sell it at current prices with a stop above these highs that we've posted over the last few hours at 99.37 and target a move down to this support that I've highlighted at 97.84. So that gives me a 4 to 1 risk reward ratio, 4.17 to 1 risk reward ratio on that today. Also, what I like as a short-term trigger is a close below the 10-period moving average. This is an exponential moving average. We saw one there, which then resulted in further downside, and we've seen another one over the last 2 hours. So I'm going to try and sell into that. So that's my trade of the day. I have got it ready to be published today, so there'll be no excuses for not following that up tomorrow and showing you how it played out. So good luck if you're following. Just bear in mind these trade ideas are a bit of fun. They are highly speculative. So do be careful.
Yeah.
Taff,
Yeah,
over to you.
yeah. So I'm gonna take silver. Like I said, I'm looking for yesterday's daily candle for the week to be filled in, and already we saw this momentum here on the daily, the Maribozo candle looking candle on the hourly, just this past hour here. So I'm looking for continuation of that. So I'll take it at market right about there. I'll target the second support that I talked about, which is 19.7, and then I'll put my stop slightly above this high here, and we've got our trend line just coming down there. Hopefully it holds. So yeah, so my risk to reward is about 2.99. My entry is 20.68, profit level 19.71, and my stop is 21.00. Yeah, so let's see how that plays out.
Very nice indeed. Good luck.
Yeah.
Okay, so day ahead, a few bits on the calendar today. We've got some ECB minutes at 12:30 UK time, which will obviously be closely watched. We've then got some US jobless claims numbers at 1:30, which is ahead of that big number tomorrow, which is the US non-farm payroll number, which is due out tomorrow afternoon, as well as the Canadian employment report as well. Then we start looking forward to next week. We've got some Federal Reserve minutes. We've got US consumer prices, so another read on inflation over in the US, which of course is all important at the moment. Regardless of what data we have at the minute, there are a lot of headlines that are doing the rounds, a lot of macroeconomic concerns. Obviously, Taff touched upon the OPEC situation, which I think the meeting's come to an end there now, but the implications of their actions could obviously be felt across the markets over the coming hours. So plenty going on, lots of volatility. And obviously that makes for difficult trading conditions. So please do be careful if you're out there trading. Make sure you use appropriate risk management for the size of your trading accounts. And best of luck.
Yeah.
So that's it from us, Taff. Nicely wrapped up with just over half an hour. It was our 700th episode of Talking Ball today. Forgot to mention that at the start. So that's a significant time we've been posting these videos, and hopefully they are providing some value to those that are watching. And that we're not going anywhere. So hopefully you can look forward to a few more going forward as well. Okay, well, have a great day, everybody, and we will see you tomorrow.
Cheers.
Bye-bye.